Hi guys, welcome back to another quick video. In today's video, I'm just going to talk about the mistake that I've seen many losing traders making. Feel free to disagree with me if you have another opinion in the comments section below. So in today's video, we are going to talk about the two different ways that winning traders and losing traders use to approach the market, and why you are probably losing in the markets. I was talking to a trader friend of mine. He's a mentor, so he was talking to some of his mentees who are losing money in trading. I don't do mentorship myself, but what I learned from the conversation that I had with him was that the problem with the mentees that he has that are probably losing money was that their approach to the market is wrong. Their approach to the market is terrible. What do we mean? What do I mean when I'm talking about the approach to the market? There are two ways that people approach the market. One is approaching the market with the mindset of certainties. Like, I'm certain the market is going to do this. Then the second approach is approaching the market with probabilities. My experience, again, feel free to disagree with me in the comment section below. My experience has been people who approach the markets looking for certainties, who approach the market with the attitude of the market definitely is going to be doing this. Usually they end up getting disappointed. You can do that for some time, where you are like, I can predict the market is going to do this, it's going to definitely do that, it's going to definitely do this, and sometimes it does. But there are times when you are going to be wrong. That's why I prefer to approach the market with the mindset of probabilities. For me, trading is a game of probabilities. There's a probability that the market is going to do this, but there is still a chance of the market proving me wrong, doing this instead. And that thing I've seen, it has made people sustainable in their trading, because they give a room for the market to prove them wrong. And when it does whatever it does, they are not exactly sad or heartbroken, because they understood that it's a game of probabilities. So there's a chance that the market will do this, but there's also a chance that the market will do that. You'll find that many people end up getting disappointed because they are approaching the market wrong, because they say the market is going to do this and the market needs to follow my analysis. The market doesn't need to follow your analysis. By the way, there are millions and millions of traders out there. I'm sure if we present them with this chart that you're looking at here, people are going to interpret this chart a million ways, because as traders, depending on who we are, we interpret things differently. So there is a chance that people are going to interpret this chart 1,000 different ways. By the way, if you are new on this channel, please consider subscribing so that you don't miss any of our future videos. If you're looking to download free forex robots, indicators, books, and stuff like that for free, there are links in the description box below. The broker that I use, the broker that I'm using here, one of the best brokers. I've been with them for more than 5 years now. If you want to sign up with them, see the link in the description box below. One of their best offers is you can actually open a real life trading account with just $5. With just $5, you can start trading a live account, and you can use that to test your strategies, your robots, everything that you want to test in real life market conditions. So go ahead and sign up with them. The link is in the description box below. So going back to our topic, you need to approach the market with the idea of probabilities. Of course, I trade zone to zone, supply and demand, or support and resistance, whatever you call it. I'm just giving myself as an example. But There are no guarantees that when price comes to this level, it's not going to break through. It's not guaranteed that when it pushes back here, it's going to drop. That's a mistake many people make. Because you are trading supply and demand, support and resistance, some people think because prices come here, it definitely has to bounce back. And you find people loading on this position thinking that the market is going to go back. No, the market doesn't need to do that. The market might bounce back, but it might also do what it did here. That's what I'm saying. You need to approach the market as a game of probabilities. Never, ever, ever, even if you are starting to make money, even if you start seeing some money coming in, don't be tempted to think you can predict the market. I know there are people who tell you that they can predict the market with certainty. There is a secret that many people don't even know about trading, or many people don't want to acknowledge about trading. You don't need to be 100% correct of the time. You don't need to be correct all the time in order to make money in trading. In order to become a profitable trader, you don't need to win 100% of the time. What you just need to win is maybe a ratio of 7 out of 10. If you are winning 7 out of 10 times, you are a good trader. If you are winning 8 out of 10 times, you are awesome. If you are winning 9 out of 10 times, wow, you should be working at some of these big banks. Nobody wins 100% of the time. I don't know where it comes from, but nobody wins 100% of the time. I don't know how many times I can tell you that. What you just need is a good risk to reward ratio, so that your 7 out of 10 times wins. Those 7 trades that you win are enough to cover for those 3 losses. Then you are good. Then you are a good trader. If you are winning 8 out of 10 times and your 8 trades are enough to cover the losses that you incurred on those 2 losses, you are good. That's what people don't understand. So don't go in the market with the idea of you have to be correct. You have to be correct 100% of the time. No, that's why people try to predict the market, because they have this pressure of wanting to be correct. You don't need to be correct 100% of the time. It's a game of probabilities, and you need to approach the markets as a game of probabilities. It's a game of probabilities. That's what it is.